All right. Good morning, everybody, and welcome, or good afternoon, depending on where you are. Welcome to the Futures Trading Friday. My name is Bennett McDowell with TradersCoach.com. And so we're going to try to see what's going on in the PM session today on the NASDAQ. And we're going to be using the ART system along with some other price action variables. So we're going to dig in here in just a moment. I want to appreciate you being here. Give us a like, okay, when you can. And hopefully the audio is working a-okay. Let me know. Obviously, if you cannot hear me, you can see my lips move. But if you don't hear me, let me know, okay? And let me just go ahead and dig into the risk control here first and presentation disclaimer. Okay, so first thing I want to just go over here are the facts that we deal in a realm of probabilities when we trade the market. There's no certainties here. Past performance does not guarantee future performance. And also, too, you need to use really strict risk control and position sizing when trading the markets. We've been teaching that for 30 years now. And also, too, just realize that, when you deal in a realm of probabilities, you have to trade with money you can afford to risk. If you don't have that money, I recommend a prop firm. It's an excellent way to go. You can do your own research and pick out the best prop firms that you want to. We're not associated with any prop firm at this point. So do your own research, check out and see which one is good, different prices, different rules, and so forth. But it is a great way to get started if you're low on funds, okay? So it's a good way to start out in practice as well. And they do give you data, to my knowledge. All right, the other thing, too, is today we trade in a simulated account. We do not trade real funds during these webinars, just so you know. It is a simulated account, but you'll pick up some things here. We use software that I created called the Applied Reality Trading Software, and you'll see that in action as well. And then finally, we're not giving advice, financial advice. And also to use this for educational content. I think that's important and needs to be said. All right, I've got several books published by major publishers from Wiley to McGraw-Hill. My latest book by Wiley is The Art of Trading, second edition. You can pick that up at Amazon by just typing in my name. And that came out last year. It's 608 pages, pretty much covers everything. I do have more deeper dives on the Elliott wave and money management as well. We all have software and sell software at TradersCoach.com. You can check that out on your own. I'll put links for all this stuff in the recording down below as well. But just know that this software is available. We have charting software, we have scanners, and we have risk control software. It works on all markets, all times. It's developed for TradeStation, NinjaTrader, multi-charts. Okay, those are the main platforms, and eSignal as well. All right, so you can check those out on your own. And like I said, give us a like. And also, too, we have another subscription service. If you want to keep up to date with the market itself, we actually every week do an in-depth review of the major indexes. And we also do stock picks here. Okay, so that's something a lot of people are interested in. And we have a good subscriber base on that. We also do live trading sessions on Saturdays, on the second Saturday of each month at 1 p.m. Eastern Time. So that's available too. And without further ado, let's dig in and see what's going on out there. Clint, how are you? Good to have you here. Okay. Clint's asking, Ben, which of your books do you suggest I start with? I would get The Art of Trading second edition, because in that you'll see risk control as well. And we try to touch base on all the major facets of the market. And it's current. Just came out last year. Okay. All right. So let's dig in here and see what's cooking. I'm going to go full screen. And I've got the 1 minute time frame on the left. And this is for the NASDAQ. Okay. So keep that in mind. And also on the right-hand side, we have the 15-minute. I also have the 5-minute. And I also look at the 60-minute. So just a little point of interest there. I always check the higher time frames before making a trade. The higher time frames are the dominant time frames, and you kind of don't want to trade against those. I also look at specific price bars that are occurring on those time frames as well. All right, so let's drop down. We'll start here. We had a really nice rally, okay, after a little bit of consolidation during the morning. And our pyramid trading points did a great job capturing this trend. So our first entry here would have been at this level here. And that is basically the top of that pyramid is your entry. And let me just bring up a data window here. Thought I had that up already. Can't find it. Okay. Is it hiding behind someplace? Anyway, let me see. No, I don't see it there. Give me 1 second. Yeah, that's interesting. Let's try that. Okay. All right. So there it is. And our first entry off this pyramid here would have been at 27,279 3/4. So 280 would have been our first entry, and our stop gets placed below. And then we trail our stops up, and we would have gotten stopped out at 24,410. Okay, so not a bad bit of profit there. It's almost over 200 points on following those pyramids. And the pyramids basically are looking at price action and momentum. And basically they point in the direction of the trend. We go in when they are exceeded, and our stop goes under the bottom. So we wait for a break in structure and then go in. And you can add into these, and we trail our stops up under them. That's how we move our stop loss placement. All right, so they're really good for trend trading. When you get into a bracketed market, we kind of want to be careful and take them only when you get a breakout, okay? The other thing too we have up here is the 20 SMA, and we like to see for long positions prices above that, short positions below. If it's kind of ranging like it is now, all right, we kind of want to be a little bit careful because that kind of indicates a range market. And if you're trend trading, you don't want to go into that. But if you're scalping it, you can fade that. Okay. The little green areas here are fair value gaps. And this is a bullish fair value gap. And these red ones are obviously the bearish fair value gaps. So we kind of take a look at those. On our indicators at the bottom, we have something called the OWL, which is a pure momentum price action histogram. And when we have higher prices but lower momentum, that is bearish divergence. We pay attention to that. This is the PTF indicator. This is a really good indicator, really high accuracy. And basically, when it's yellow, it's neutral. But when it's green, it indicates a higher highs are coming. So it can be helpful when you're kind of determining whether to hold a position or let it go. Under that, we have the trend line master, which is just telling us the current trend. And that is all part of the ART system charting software packages. All right, so there you have it. And all right, so let's say 5 minute, we're above the SMA. Okay, we have a little bit of OWL coming down. We have bearish divergence on the 1 minute. Let's go and take a look and see what the 15 minute is. Okay, all of these are still in an uptrend. Here's the 60 minute uptrend as well. Okay, with a lot of our trend line masters drawing in the trend lines there. All right, so the trend is up. Now, there's a couple different ways you can trade this. You can keep trading to the upside until it stops working. That is certainly one way. So you're never betting against the trend until it reverses. And eventually you'll get stopped out if you're always trading with the trend, right? The other way, we also take a look and see if there's any equity, and we're in kind of no man's territory. We took out this top here, but there's no further equity for us to really take out. So that is definitely a predicament you want to be careful of. Looks like we're ranging right now. We've got 3 o'clock or 1 o'clock on the East Coast, a little bit later. Usually about 1:20, we start to see some algos kick in for the afternoon session. So that's coming up. And a lot of traders will come back around this time, which is why we started the room at this time. and begin trading the afternoon session. So let's see what's going to happen with this. Are we going to go up further, or are we going to get some form of reversal? We don't have a change in structure to speak of yet. And what that means basically is this low here would have to be taken out on the 1 minute time frame for us to be really thinking about a short trade, right? And at this particular point on the 5 minute chart right here, prices are still above the simple moving average. Okay, so at this particular point, you want to be really reluctant to go short until we have a change in structure. So we're getting a move, or we're getting rejection off that bullish fair value gap right there. Okay, so we did get a little bit of that. Let's go out and see what we've got cooking here on the 15-minute time frame. And as you can see, we've got this price bar right here indicating the range, okay, even there. So we see that range here and here. So probably the best thing to do is let's wait and see what happens when that range gets broken and see if we get a reversal. Or if we break this top here, let's see if we continue on up. So if I had to take a trade here, I'd probably take a long trade. We did get a close above this bearish fair value gap, and then we saw some rejection off that. So we're kind of isolated here between here and this area here in terms of fair value gap here and bullishness to the upside. All right, so prices are making another break to the low. And let's see if we get a rebound here. If we get a power bar up to the upside here, above that SMA, we'll probably take that to the long side. But so far right now, it's kind of in a consolidation area, and I kind of don't want to touch it here. Sometimes the best trade is no trade. Hey, if you have any questions, you can type those in the comments area. All right, so this is the micro, by the way. And this simulated account, it's 100,000. But a lot of times I trade it as if it was much smaller, especially on days where we have had so much volatility. And so many people trade the $50,000 prop accounts too. So you got to keep your risk in line for the account size. All right, so we're kind of right down here. It's kind of a little bit of an order block right here. So far we're respecting that fair value gap, certainly respecting the order block. And let's see. It's very easy to get chopped up in this type of configuration, this area. All right, so we have a bearish fair value gap that formed here, and a bullish one that's getting rejected here. So if we get above this bearish one, then that's actually, I mean, body has to body and close above it. That can be actually a signal that we may get one more leg to the upside. And by the way, these fair value gap indicators that I have, those are free on NinjaTrader. So you do not have to buy those. Okay, Clint is asking, will the OWL and PTF indicators give you an entry signal? I prefer, I mean, some people do trade it that way, but I prefer to have price action along with the pyramids for my entries. And then I don't like to go against the OWL or PTF unless equity was taken out or something of that nature. So they're kind of more, I use the indicators down here below, really. Think of them as check boxes, okay, for confirmation, especially these two. All right. If this is green, it's okay to go long. If this is yellow, you can go long or short. All right. But you don't want to trade against it for the most part. All right. So now we got a dip down here, a nice wick trade to the downside into that order block. So if I went long here, this may be a great place to put a stop if it held. All right. We just got a red owl down here. Okay. So now we're getting a little bit more movement to the downside. We got a nice power bar out there. All right. So we're getting down to the EMA on the weekly chart, on the 5-minute chart rather. Let me just take a look at this and here. We technically really don't have a change quite in structure yet either, okay? So that's where you got to be careful, all right? The change in structure, like I mentioned before, is really there, right? Now, technical analysis, when you get a big price bar with a bearish fair value gap below the SMA, that can be a short trade, okay? That can be a short trade. With the target being a change in structure down here. But it's a little bit more riskier trade because you haven't taken out structure. All right, I think I'm going to go short here. I'm going to put my stop right above here because if it digs above that particular fair value gap, I don't want to be short here, okay? And then I'll put a buy here, and hopefully the TP will be even further down, but we will see, okay? Now we have a big wick here, okay, and a big wick here. So sometimes, you know, you only get down halfway into the wick. Almost, it's treated almost like a fair value gap. So we are short now. So I want to go low trade size because I haven't really got confirmation on the longer time frame yet in terms of getting below the SMA and taking out structure. So it's a fairly, you want to kind of go a little low on the trade size here. I'm going to tighten that stop a teeny bit more down here. So counter trend trade, lower risk. Giovanni, how are you? Good to have you here. Sure, we can take a look at crude in just a moment. Let's just see how this one does here. I'll run over there real quick. Okay, so this is crude oil, okay? And that is bearish as well. That's nice. That's a nice bearish. Okay, so we got prices above the SMA here, below here. Nice fair value gap rejection there. Change in structure there. So, you know, crude oil goes down, the NQ could certainly go up. Okay, it's usually an inverse situation. Let me go back over the NQ a second. So I've got my stop right at some sell side liquidity here. Okay, we'll go back to take a look at crude in just a minute. Could be a good trade setup here. Okay, so we came down to the 50% wick area here, and we're seeing a little bit of a reversal. Let's see how this price bar closes. It's interesting. I've got a P&L thing here. I think I can show that. YouTube's funny on what they'll allow you to show. I would think on a sim account you could do that. Not sure. All right, let's see if we can get some our first stop get hit there. Okay, so we got one out there. So I'm just going to move this to break even. I don't really like to do that, but I'm going to do that in this case. And now I'm going to go take a look at crude oil. Let's go back there. All right, so crude oil, all right, still above here, the SMA. When I say here, that's the SMA. Okay, and it's bearish, but we're still seeing another leg up. I think another bullish leg up here. So let's keep that in mind. If it drops down, then I think the NQ will get stopped out. But here NQ's gone. All right. So now it's working on sell side liquidity here. Let me just open this up so you can see it better. All right, we're working our way now below the smooth average on the 5-minute chart, as you can see. Now, crude oil, Giovanni, is great to trade at night for the Asian session. NASDAQ can be a little boring at night, but crude oil tends to be moves pretty good. All right, so we're getting a nice little move down here. We got a new red PTF. All right. Now, if you were a scalper and you see a reversal after taking sell side liquidity, you could certainly do that. You could scalp out of this. I imagine this will pull back up into this area at some point. That's a bearish bar on the 5-minute. Let's go to the 15-minute. And that's a fairly bearish bar there as well. Okay. All right, so now we're getting a little bit of a reversal. We still have a red PTF. Stop might be a little tight, but I'm going to keep it there because I can always go back in. Okay, that's a big bar back to the upside. They did not take this sell side liquidity out. I think we're going to get stopped out, but we will go back in if we need to. Okay, so we made a profit on that trade, not much. All right, we gave back quite a bit, but didn't give it all back. All right, we're starting to get the PM session kicking in here. This is kind of interesting. All right, so that is very interesting. Let's see what we got cooking here. That's why I like to take off a contract at the first sell side liquidity, because it actually locks in a profit no matter usually what happens. All right, so now we're getting a bullish fair value gap here. Okay, we've got a fairly bullish pin bar here. Let's see if we get over these bearish fair value gaps here. We still could head back down here. Hello, 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 Anisha. Nice to see you here. If you're new to our channel, my name is Ben McDowell with traderscoach.com, and we're trading price action along with using the art software indicators you see at the bottom. Okay, so that's a nice rejection off that bearish fair value gap. And a bearish fair value gap is basically 3 price bars, okay, with a gap in between price bar 1 and 3. All right, so let's see here if this bullish fair value gap tends to hold. A lot of times you get a move into consequent encroachment on these, and that would be basically 50% of the length of the green area that represents the fair value gap. So we'll mark that off. So we got a bearish PTF, bearish momentum. We got a bullish looking pin bar on the 5-minute, but they can be broken very easily. And we've got bearish bar kind of on the 15-minute. Got to be careful. You get really chewed up in an area like this. And then we've got, of course, the 60-minute still making high. So any short trades, you got to be very careful. We actually made money on our short trade, but you got to be careful on those. Now, the SMA is slanted down, all right? So we're going to want prices to get above that and get it above the red-colored bearish fair value gap. Okay, so keep that in mind as well. Zen Trader, how are you? Good to have you here. Alexander, good to have you. All right, so now we're pushing back down a little bit lower here. Now, a close below, not a wick, but a close below that fair value gap would be kind of bearish at this point, and a change in structure, even on the weekly, okay? this pyramid that's forming here on price action gets confirmed when prices go below the point, that would be a primary trend pyramid trading point to the downside. So we didn't get, okay, now let's see if we get a body below this. Got a nice big wick here. The other thing too is sometimes when you get an unexpected large wick out of nowhere, the market, it usually does that because it's taking out stops. And then the market goes in the direction that that closes up on, okay? Okay, so here comes our body to the downside here. Notice those are pretty good sized wicks. Probably should have put my stop up in this area here before, but I'm so used to trading prop accounts that I don't like to give back the profit because it screws up with the trailing drawdown. Because you can always go back in. All right, let's see here. If we can get below this low here, that would be a good change in structure. See how things picked up at the 110 mark? Okay, so we did get a body below it here. Let's see if we take out that low, and then I'll go short. So we just started trading live. Last Friday was our first day, so this is day number 2. Do it every Friday. Look at the wicks on this thing. Wicks usually mean manipulation, stop hunting, and even indecision. Okay, so the consequence encroachment on this, I'm going to get rid of. That really did not hold. We had one body below, and then it bodied back up into it. Notice how you have a bullish and bearish pyramid. Point is pointing down, and then the point is pointing up. Those are unconfirmed. Prices have to go on the other side of those points for the pyramid to be confirmed. So what it's telling us by being unconfirmed in both directions is it's in a channel. Now, if prices dip below this point here, and the PTF is not below the lower line here, then that will turn yellow, okay? So when it goes from either a red or a green to yellow, that means it worked that time. Okay, so now prices are above. There we go. All right, I'm going to go long here. I'm going to put the stop under the pyramid. Low trade size because I have a red PTF. The PTF turns green, I'm going to increase the trade size. I also would like to see a body close below, above the pyramid. Now, these are micros, okay? So, very little money, but a great way that everybody can get involved with low risk while you work out how you want to trade. All right, so now let's just say a couple things. Let's just say your normal trade size is 5 contracts. All right, and you start out lower than 5, and that's with a stop down here. If you get a pullback, you can add on. Okay, that's okay to do that. But if you go in with 5 and your risk is set for 5 under here, then you got to be very careful about adding on because you're adding on to a losing position. Okay, and that's dollar cost averaging, not usually recommended. But there are exceptions. Okay, so now we're getting a nice power bar up here. Let's see if that closes on the 5 minute and another 2.5 minutes on the top of the bar. Now, if we come down into this fair value gap and rejection, I'll probably add another one on. But we still have a red PTF. All right, Clint, let's see. Okay, the first fair value gap, you mean this one here being the first one? Or did you consider this one the first one? Usually on fair value gaps, all right, what you usually do is you wait for price to come back to them and show rejection or not. And that is usually telling when they do not show rejection, okay? So this one here, this one failed, okay? This one bodied below the fair value gap, so I waited for the pyramid. If we had gotten a rejection before bodying below the pyramid here, that would have been different. But this is also an order block, so it rejected off that as well, okay? All right, now we're back into the pyramid, into the fair value gap here. Red PTF, that's the only thing that's concerning me right now. There's a 25% chance it could be wrong. That's not high. But we may break out above these highs before prices come back down. Starting to see a bearish bar on the 5. Let's see how that 15 is looking. 15 is still channeled. Okay, there's the body starting to go below the fair value gap. Got another one here. I've got my stop below the pyramid. Now, if this body's below here, that could be an inverse fair value gap, and that would be a reason to exit the trade. And then if it climbs back up like a bull flag, then you can get back in. Nothing wrong with doing that either. Clint, did I answer your question, hopefully? Okay, so we So we bodied below. Okay, good. We bodied below this. That's bearish. Okay. But we still have one more here for it to hold. So let's see what happens with that. The pyramid's bullish. The owl's bullish. The PTF is not. Prices are above the SMA and kind of hugging the SMA on the 5-minute. The trend overall all day has been up, but that doesn't mean it will continue. But we kind of want to go in that direction until it fails, right? So we may be getting ready to come down here a little bit. One thing, we've seen a lot of volatility in the NASDAQ overall. So you got to give your stops some room. The other thing too is we've seen more wilder wicks on the MNQ than the NQ. All right, let's see here. Let's see how this candle closes here. Bullish on the 5. All right, I think that's looking pretty good with 16 seconds left. We'll add one more there. Okay, so with that configuration on that one I just added, I'm going to put a sell stop under here because the reason I added on to that is it looks like it was going to go. So if we get a reversal from this, I don't want to put this stop. I don't want to have two contracts that far down for a stop. So we've got a possible fair value gap forming in here. Price bar is not closed yet. Now, if we break the high and comes up here, then my stop is going to go, this stop is also going to be moved up under the pyramid. Okay, so we wicked into that fair value gap. You can see where it formed. I'll remove those two lines with the yellow. So that, let's see. Now we're getting another pyramid down. So the pyramids have identified this as a channeling area right there. I'll probably target this little area right here, selling one, and then we'll walk them on up. Okay, that bearish pyramid went away because prices voided it out. I mean, yeah, voided it out. The bullish one is still there. So why do I have a take profit here? Well, that's sitting right at the high where there's could be sell side liquidity. So if it wicks up there and reverses, I want to take at least some money off the table. Now, for a minute, watch the price bars and see how your emotions change from bullishness to bearishness on each price bar. That is what makes trading so difficult, is when you watch every price bar and your emotions are hinged on that. I want to just show you something. So this is going back and forth, right? But look at that. That's a bullish price bar. Good sign for a long position. Yes, it can change, but at least you're going now in the direction of the higher time frame. Doesn't mean it's a guarantee, but it's a good sign. Trying. Now, it took the equity there. Let's hope that's not the, let's hope I didn't miss it by 1 point up here. Possible, done it before. Again, bullish price bar on the 5. We're coming back into another fair value gap. We're seeing rejection. So this type of trading would be very different if I was coming off a bottom and it was selling back to the upside. I'm getting into the discount area. I'd be more willing to have my targets further away. But I'm in no man's land here. Okay, we're making highs that could end at any time. So it's a little bit different thought process. All right, so we got that one out. We'll cancel that one. I'm going to have my stop right here. We have not made a new high yet. So when we break this high and come up here, I'll move to break even. I don't like the break even that much, but when it's in no man's land like this, I like to bracket it up there. Still losing this trade. Let's just put a line over here like this and mark the high, okay? Let's see if we can get up there. If we can break that high, then I think probably we might go into a little bit of a range bound market. But you see, it's interesting. I mean, see how your emotions change. I mean, when it was coming down here, like, oh my goodness, it's going to fall. Now, oh my goodness, now it's going up. You got to be careful not to be influenced by every price bar. My bias is we're going to make a new high. So that's why I'm staying with this trade. My low trade size is because we have a bearish PTF. And so I don't know when it's going to reverse. Let's see if we can get over that wick candle here. 10-bar candle, bearish. Did it scoop it? I think it might have. Let's see what the high is on that is 24.25. Nope. Did not go above it. Went right to it. Are we above the SMA? Yes. Are we above the SMA on the weekly? Yes. Are we in the direction of the PTFs, pyramid trading points? Yes. And the only thing we're against is the PTF. Right? Is that a range-bound market? Yeah, kind of. Is that the most difficult market to trade? Yeah, kind of. All right, seeing a little more rejection off that. It's not unusual for the market to test and go deeper into those fair value gaps, sometimes 2 and 3 times. They're big. Okay, one more push up. There it goes. Okay, so it cleared the top of that 10 bar. Bullish bar on the 5. How's the 15 looking? Bullish. So we're going in the direction of the higher time frames. Broke out that high. Let's see if we can break this high here. A lot of people will be taking profits right here. We're just going to go to break even if we break that. And yes, you could take profits if you want to. Now, another thing it does a lot, it gets real close. There it is. Okay, now that is a dangerous price bar if we don't get above it. Oh, look at it. Look at it. Go, baby, go. All right, close out of that. I'll take that. Okay, so now we're up 130 bucks roughly. 129, 129.30 and 30 cents. Okay. So here's the indicator on that. And probably could still go up higher, but that's a heck of a pin bar right there. So let's see what the market now does. Now we have a green PTF. So that was one of the 25% times it was wrong. Okay. Usually, not always, when you get a pin bar on a new high like that, okay, that usually is a very bearish signal. Not always, but usually. So that one price bar had a high of 462 and almost 50 points, 40 points. Thought it was more than that, actually. For Friday, late Friday afternoon, that's not too bad. So if that price bar wasn't as elongated and tailed as it was, I would have stayed in that a little bit longer. But a lot of sell side liquidity sitting up there. So if you drew a line on the sell side liquidity, that would be right here. So you had a high, you had stops here, stops here. Wow. Because it's so obvious, I wouldn't be surprised if they took out the high of that. Usually when it's really obvious, that's when they surprise you. Okay, so the momentum on the owl is dropping down a little bit here. The price is not coming down that much. So somebody's accumulating in here probably. You see how that looks again. Still bullish on the 60-minute. So far, this fair value gap, it's bullish, is holding.
Bullish pyramid trading point entry now.
All right, so we got, see how we do on this one here. Okay, we got green PTF, green owl over here, a little bit of bearish divergence. We got a 5-minute green fair value gap that represents this area here, basically. And nice up there. Okay. Say if the room opens enough, you can just basically kind of almost jump in where these pyramids are and just follow them up. Great morning this morning on the pyramids. Look at that. That would have gained you 200 points. All right. That's what I want to see. I want to see what kind of, see if we can climb out of this. Okay, momentum coming back in. Rejection off there. I think we'll go back in and we'll put our stop here.
Order submitted.
Because that's a fair value gap. That's an order block. So I want to put it under the order block.
Order
I'm going to go one more. I'm going to get out of consequence encroachment on this wick. It'll be a short little scalp. One contract here.
Order submitted.
And we'll get
Submitted.
that 2 there. All right, let's see what happens on that. So that's considered, this one bar here is considered a power bar. So it's a power bar when it's above the 20 SMA with no wick on the top. Does it always work? No. But it does work more often than not. And we have a green PTF. And I got one sell stop up 50% of the wick in case it doesn't make it above that. Okay, so now we're into this lower wick area here. And we'll see. Risky trade because of this long pen bar to the downside. Okay, that's being respected. So the reason I took that trade is because of the close on this bar here. Had no wick on it.
Bearish pyramid
Oh
trading
boy,
point
that's
entry.
not good. Not what I wanted to see. Maybe getting a change in structure here. Don't move your stop. Once it's set, it's set. I mean, you can get out now if you want, but it's set, it's set.
Bill.
All right, now we're out. Okay. They're still up for the day. All right, now, all right, the power of that wick is becoming apparent. So now we may have some movement down for a while. We'll see. So basically, this power bar ended up being a manipulation bar. The owl's about to go red here. Not quite. You know, it was interesting on this move up here, we did not get a fair value gap. We have overlapping wicks. That's usually the sign of a manipulation bar, so they sucked us in on that one.
Bullish reversal bar entry now.
Took out outside liquidity at these stops here. Pretty much right where we were. That's okay, because the reason I went on that trade really was this price bar here. So okay, so prices are below the SMA, but not below it on the 5 minute. Let's see how the price bars are looking here. All right, changing structure a little bit there. Technically, the P pyramid still has you long here. This is an MP. You can use that for scalping out, scaling out. Small fair value gap bullish there. We got to close below here. I'll short stop up here. Otherwise, we'll consider the trend still in place. 35 seconds till close. So these areas near the top, when the market may be rolling over or may not be, are the toughest parts to trade, really. Let's see if we can get below here. Got a little bit of a change in structure here. Who could bounce off this 5-minute SMA here again? We don't have any more fair value gaps on this leg down, bearish. And we close below there. That might mean we're going into a range type of thing here.
Bullish reversal bar entry now.
So the 2B scalping just got hit. So you take your profit, probably if it got up to the SMA on this one here, we're scalping it. It's starting to slow down the market. $220 something should kick in. I think 250 right around there.
Bullish reversal bar exit now. Bearish reversal
Okay.
bar entry.
So it just cleared that. Lot of sell side liquidity to take out down here, guys. Interestingly enough, the only bearish fair value gap is sitting up here. Oh, he's got one here, I think. We can get below this pyramid here. That would put us below this order block here. That would be pretty decisive. Now we're seeing bearishness on the 5. 15 is rolling over. I'm going to go in light with 1 here.
Bearish pyramid trading light entry. Now.
Order
I'm going to
submitted.
go in with another one. We get it moved back up there. I can go in with 5 and be within my risk control, even if I have my stop set way here.
Submitted. Submitted.
I'm kind of targeting this low here, where may this right in the smack of the fair value gap, almost good percentage down into the probably the start of the fib retracement area there. So see. It's a good 2-to-1 risk to reward. If it pops up, I'll take another contract to the short side. But that's kind of a breaking structure that's happening on that time frame. But let's see about the 5. Technically, we've got to get a little lower. This will be the last trade, I think. But we could be in it a while. We'll see. But you see, if you keep your trade size small enough, all right, you can actually trade the market and start learning how to trade without having a big financial impact. Because you can always increase the size, right? That's one of the things I'm trying to show you guys is that you don't have to trade with the full NQ or anything like that if it freaks you out. Just trade small and enjoy the process of learning it. And then after you're done, go into your journal and see, okay, was my stop good? Was this good? What did I do wrong? What did I do right? That type of thing. And if 10 points is all you want for a scalp, you get out now. Okay. Still very possible. Could come right back up to this fair value gap, this bearish one, which is why I got another sell order in there. Again, anywhere up to 5 contracts on the 1 minute with stops pretty much where they are now, completely acceptable for me. Okay, so that almost came up to the fair value gap on the 5. Huh. Close. All right, let's see if we come up, Phyllis, and if we have rejection. Now, if you're starting out new, I would not rest your buy here. Wait for it to come up and reject, because it could just truck on all the way up here, stop us out with 2 contracts. Almost. Oh, that's funny. Missed it by a tick. Literally. So it was a high there. It's exact. Didn't fill us. Went up to us and didn't fill us. That's pretty funny. All right, let's see if we can close below this fair value gap here. Okay, if we breach this low, I'm going to get rid of this sell and move my stop down above there. That's pretty funny. It went right up to exactly where our order was, but didn't fill it. Is what it is. All right, I think we breached the low here, didn't we? Let's get that out of there.
Bearish pyramid trading point entry.
And move that here. So now we got another fair value gap here. We can put our sell on right where we entered, actually.
Order submitted. Order submitted.
All right, let's see. Would have loved to have gotten filled there, because I would take profit, one partial here and a full here, but maybe we'll get filled now. Let's see. Of course, we could always get filled and get stopped out right away. It's always a possibility. We got rejection off that. Usually it's half of the fair value gap, Clint. And what you can do, sometimes you'll see me grab the fib retracements and, do this. And if 50, I'm right above the 50% mark, but that would be, okay, so we just got filled. Okay, so that would be the ideal place. But you're kind of better off when you're starting out, let it go up there and don't place your order in beforehand, but let it reject and then go in. Because this could just truck right on up here, and keep going. All right, so now I think what I'll do is I'll put a,
Submitted.
but not for 2, for 1. So that gives me a little more flexibility in grabbing some profits, partials at certain levels if we're right on the direction. So our bias is still short here. I wouldn't want my stop any closer. Could be up here, but I'm going to keep it where it is. Okay, you got a little rejection there, but you didn't get a lower low off that. Now it looks like we may get stopped out. Some people would put their stop a little higher, like up here on that first bar of the 3 bar. It could just be gnawing into that fair value gap again. So we inverse this bearish one here, right? Oh, my pleasure. Okay, it stopped out. All right, so now we're down $35.90. Big whippy. So a lot of times, this is the first bar, second bar, third bar of the fair value gap. And I have to be honest with you, I think putting stops above the first bar is a better way to go. I do tend to I've been getting stopped out a lot in this volatility. Used to be able to be okay in that area there, but not, especially when it makes another low, but it just barely made a low. So I think I'll put my stop going forward above that first bar. All right, so we got kind of a reversal situation going on the 5. Let's remove this order. Climbing above here. Let's see if we can close above here and get with a green owl. We almost got a bull flag over here. coming into play. Something like Friday afternoon. Antonio, we should look at crude oil here too. All about that. Would have been a better trade, straight up. Oh my gosh. But now, fair value gap is quite interesting. Big pen bar down here. Double bottom down here. A lot of stops sitting here. Took equity here. Red PTF there. Let's try a short here.
Order filled.
This time we'll put a
Order submitted.
stop above the first price bar on this fair value gap. See how we do.
Order submitted. Order submitted.
So we'll go for the equity down there. And at the same time, we will, this is the micro crude oil. And at the same time, we'll take some profits on the first possible area of resistance here, right on the SMA, which is about a 50%. So this trade is really more based on a 5-minute chart. So we did get a power bar under the SMA, but it hadn't turned really yet. So do you guys understand with fair value gaps that it's 3 price bars that it takes to form them? And so when I say put the stop above the first one, that would be above here. So this would be 1 price bar, 2 price bars, 3 price bars, and then this is the gap. I'll be right back. Okay, I'm back. All right, so we're getting a little bit of a push to the upside again. So we've had, let's see, we've had 1, 2, 3. This was the 4th push up into this fair value gap. And then we saw rejection. That is usually that, 3 pushes up and a big fair value gap like that is not uncommon. And we have it also on the 15-minute too. So let me just see how the stop looks there. A little tight on that, but let's see. So let's see how that one works there. That 5-minute should hold. right? Looks like it's starting to move. Antonio, you still here? I know you're overseas, so it might be, I don't know what time it is where you are.
Bullish reversal bar entry now.
Oh boy. Coming up on the hour mark. Crude oil change is different time though. Let's see what the NASDAQ is doing. Ranging. I think we'll stay on crude oil for right now. That's not doing too much either. So if it comes back up again, it could take this high out and then still sell off after that, as long as it doesn't get above that fair value gap, close too far above it. The bearish one on the 5. So we'll see how that goes there. All right, so I got all my stops in place. Take profit. I'm going to go down and get a cup of coffee. I'll be right back. All right, let's see. Same old, same old. So on the 1 minute, we changed structure here. We got a big, big fair value gap that's bearish here. Red PTF. So there is a good case for being short here, except above the SMA on the 5 minute. But that bearish fair value gap to me is a bigger deal. So we got a fair value gap here. So that is bullish. So we may take out this high here one more time and gnaw into here. Let's see if this closes below it on the 1 minute time frame. That'll be, oh, wow. Interesting. Getting a little activity now. Okay, that was a close below that. So it inverted that bullish fair value gap on the 1 minute time frame. Let's see what kind of follow through that creates. I still got to get below this wick here, which may not be too easy to do. We'll see. Okay, now we got a bullish reversal bar. It may just stay in this range here for the rest of the day. To see. Pretty tight now. Be interesting. It's consolidating quite a bit. So accumulation, let's see what happens with that. Like it, if it's going to sell off, I think it's going to take out this high at 94.65 first. That would be accumulation, manipulation, distribution, but it's late in the day. Once again, this is the micros on the crude oil futures. Well, we were profitable for a fraction of a second.
Bullish reversal bar entry now.
So this little reversal bar is part of the art software, and it triggers. That's that noise you might have heard. But that we use that for scalping.
Bullish reversal bar exit now. Bearish pyramid trading point entry. Now.
Oh, don't tell me we're finally going to move here. Just hope it's in our direction. kind of want to keep these rooms at about 2 hours, so I don't know how much longer I'm going to stay here. I might just close it out in a minute. See if it moves here. Moving a little bit. See what the 15-minute chart looks like here. Oops. Just bring these down a little bit. Another bearish for fair value gap just formed. The 1 minute. Guys, I think I'm going to get out of this sooner rather than later. Try anyway. See real quick what the NASDAQ is doing here. Ooh, now, boy, that would have been a nice trend up. One more high there. Okay. Go to MCL. Moves down, moves up, moves down, moves up. All right, so this retraced about 50%, a little over 50% of that wick. So if it's bullish, it's going to go up from here. If it's bearish, then it will take this bottom out and keep going down, I think. Getting late, so I'm going to just get out. If we happen to get down into this area, I'm going to take some profit off the table. In fact, I think I'll take this one off here. Oh, like I said, it came right down to this wick area. So now we're getting the pop to the upside. So I think probably it's going to take us out here. I just moved my stop down quite a bit, only because it's late and it's time to move on here. So it may knob into this area, like I said before, and then sell off. So we may get one more high here. Looks like we're probably going to get a bullish fair value gap here. This is just tough trading. I mean, this is late in the day and it's just messy. This is not a prime time to trade this. But we're here for the room, so we'll see what goes on here.
Bearish pyramid trading point exit now.
Order filled.
Okay, we're out.
Order canceled.
All right, that's going to be it for the day. We're down $94.10. So it is what it is. I do think there's a possibility of this selling off one more time, but I just think you're going to have to wait a long time for that. So I think that's going to be it for today. All right, not every day's a winner, but you want to keep those losses obviously somewhat in check. So and that's what we did today. All right, well, guys, have a good one. We'll be back next week, hopefully a little more exciting market. Let's go back and see how the MNQ is looking. That was actually a nice move to the upside there. It's kind of interesting. So this was moving up as oil was also moving up a little bit. So usually that's, unless it's coming down a little bit now. Let's see, MCL. That's gold. That's another one that's possible. All right, yeah, moving up, continuing. So, okay. So I think it's going to take out this high and gnaw into this fair value gap again. If it closes above it, then that is bullish as well. All right. Thanks, Clint. You too. Have a good weekend, everybody. All right. Remember, risk control is the most important thing. All right. So we'll see you back here next week. Thanks so much, everybody.